So today's video is inspired by an article that caught my eye, as well as some upcoming earnings, especially the very highly anticipated Nvidia. So the article is called One Stock to Buy, One to Sell This Week. And it highlights two companies that we're going to take a look at. So we're into another big earnings week, and I hold both of these investments in my growth portfolio. And we're going to be taking a look at what the future could hold for these companies and what it means to investors like you and me. The two stocks that this article highlights is Nvidia as the buy and Target as the sell. So let's get started talking about Nvidia. The article singles out Nvidia as the stock to buy this week. And honestly, it's not surprising because NVIDIA has been a tech leader of 2024. So let's take a look at NVIDIA. Earnings are coming up tomorrow for both of these companies. On the day, NVIDIA is up 2.37%, but year to date, it's up 197.93%. Their stock price has been driven by the explosive growth in the AI sector. I started investing into Nvidia just at the beginning of this year, and my position, I'm already up 57%. Nvidia's GPUs are on the forefront of artificial intelligence. It's needed to power everything from cloud computing to autonomous vehicles, which we're hearing so much about with Tesla and Waymo by Google. So, NVIDIA's reports Wednesday after the close, and analysts are anticipating another strong performance. In its last earnings report, revenue was up 101% year over year, primarily driven by its data center segment. While NVIDIA's growth is impressive, the article highlights its hefty valuation with a forward PE ratio of over 30. So, this makes some investors cautious because they're wondering if the AI driven rally is sustainable. And when it comes to NVIDIA, I think that they still have a lot of growth potential ahead, but it won't be at the rate that we've seen in previous years. Let me know your thoughts on that. NVIDIA's last earnings were on August 28th, and they closed at 125. And as I said, they had a very strong earnings report with revenue up over 100%. But within a few days, their stock price dipped down to $102.83 on September the 6th. So you never know what exactly to expect when it comes to earnings. So if it is a position that you are still working on building out in your portfolio, set your alerts so that you can potentially pick up more at the price or percentage pullback that you are looking to accomplish in order to continue building out your position. So now let's take a look at a few points from this article of why NVIDIA is a strong buy. The demand for AI solutions continues to skyrocket. NVIDIA is reaping the benefits of this. Analysts expect that data center revenue will soar again this quarter. It's needed in everything from gaming to autonomous driving. NVIDIA's influence spans multiple growth industries. And even with the high valuation, NVIDIA's strong execution has kept investors highly optimistic when it comes to the potential for the company. But with any investment, there is risk associated. So keep your portfolio diversified because even though NVIDIA is a very high conviction investment for me, they still have their obstacles. For example, right now they're having some struggles when it comes to delays related to the Blackwell chips, and they are overheating. So they have some things that they need to get resolved there. But it's a company that is still an industry leader, and I think that they will get through whatever obstacles they are facing. Okay, so now let's shift to Target. They have their earnings tomorrow also. When it comes to Target, it's a very different story. When it comes to my portfolio, it makes up about 3%, and I'm currently only up 5.07%. My average price is $149.84. The current stock price of the time that I'm filming is 158.27. And I'm only up 5%, and I've been investing into this company since October of 2022. I haven't continued to dollar cost average or try to average down. because I had already made my decision that I didn't want this to be a large portion of my portfolio. And I think it was a good choice that I put more focus into other investments, which I'll run down at the end of the video. So, I won't be selling, I'll be holding, and I'll let you know why. But this article suggests that Target might be a good thing to let go this week. Target reports on Wednesday, as I said, before the open. Analysts are expecting a modest 2% sales growth to about 25.94 billion, with earnings per share forecasted at about 2.29. Target has been battling inventory management problems and rising theft losses, which have weighed on their profitability. I was just at Target with my daughter this past weekend, and I did all of my shopping, and she spent the whole trip to Target waiting for a cabinet to be unlocked so that she can get her face wash. But back to what we're talking about here. There's also stiff competition from Walmart, which dominates in this low cost model when it comes to sales. Target has struggled to attract the same level of consumer spending. So, Walmart just reported today, Tuesday, November 19th, and they easily beat expectations. Here's a look at some of their numbers. They've had strong improvement in all areas, in store, pickup, and delivery. And Walmart's results often set the tone for the retail sector as a whole. So we will see tomorrow what things are looking like for Target. But taking a look at Walmart quickly on the day, they're up 4.14%. Let's talk a little bit more about Target. Their valuation and dividend yield of nearly 3% make it appealing for some long term investors. So the article labels it as a sell, but some may see the benefit of holding it long term. And that's just one person's opinion. Taking a look at a broader group of analyst ratings here, 63% rated a buy, and there's an average price target of $181.87. And some recent analyst ratings here of 185, 195, and $165. And as I shared already, in my portfolio, it only makes up 3%. So I'm okay with holding it until it turns around a bit. And then I may cut it from my portfolio and move the money into something else. But I am not inclined to do that yet. If it was a larger position, maybe I would have let a portion of it go. But I'm only up 5% and don't really have the need to do that right now. So the article highlights a few factors when it comes to the recommendations of rating it a sell. Walmart's dominance and better execution continues to outshine Target, especially as inflation pushes consumers to prioritize all the cost savings that they can find. The shrinkage and theft remain a big issue, which are cutting into profits, and economic pressures are mounting. Target's mid tier positioning makes it more vulnerable than budget focused competitors like Walmart. And I think another thing is the convenience of Amazon shipping. So I've been sharing all along what my feelings are about the buy or sell debate. There is no debate when it comes to my portfolio. Ideally, I would not have even invested into Target, but now that I have it, I'm going to hold it, as I said, until it turns around. But I could have just as easily invested what I allocated into Target into Microsoft, Google, Amazon, even Apple or VTI, one of my other positions that have grown much more substantially over the last couple of years. So, do your research, make sure that your investments align with your financial goals and risk tolerance. As far as Target goes, I don't see it as a good investment for its dividend or valuation as compared to other investments that I've made, like Main Street Capital, that are giving me growth and that steady, continuous dividend payment. So make the most out of this earnings week and set alerts so that you can catch an opportunity if you are still building out your positions. Pay close attention to the news related to the future of these companies that you have in your portfolio. For me, balance is the key to long term success, and I'm achieving that by having my ETFs and chosen blue chip stocks in my portfolio. And I really have to put the work into doing my research and having an understanding of those individual investments that I am in and knowing which ones I want to have that higher exposure to. And thankfully, I have achieved that with less slow movers or investments that have had a pullback or struggle over the last couple of years. I have much more higher positions in the Apple, Nvidia, Google, Microsoft, Meta. Those investments have not disappointed and have grown steadily over the last few years. So it's not hard for me to have to hold on to a few smaller positions that have these type of struggles. And I won't let them go until I feel it's needed and most beneficial for me. And it doesn't put me in the position where I'm in a rush to have to cut them from my portfolio, especially if I'm at a loss. So, decisions to buy or sell don't come from headlines. They come from you putting in the work and the research and making sure that you add investments to your portfolio that are completely in line with your goals. And then, if they're not, of course, you can move forward with moving that money into a investment that better suits your needs for the long term. So I'm looking forward to these earnings results to see where these companies are headed. Share your thoughts in the comments. Are you buying, holding, or considering selling anything this week? Don't forget to like, subscribe, and hit that notification bell. And check out my referral links for Weeble and Moomoo, as well as channel membership. They will be in the description and pinned in the comments. Thanks for watching. Okay, bye.